Hi guys, Harry Otis here, professional trader for 20 years. Started my career in 2005, still alive in 2026. And yup, this market is like Vincent Vaughn from old school. This market is still holding the highs. S&P 500 today, green candle, 1% up. Okay, this is a pretty strong market. We kept saying it, despite all of the craziness that's going on in the oil sector and with interest rates that we kept talking about this past week. This market is still holding the highs. Okay, and that's because today we're up because Trump comes up and says we are in the final stages of a negotiation with Iran. Okay, we'll get to that soon. Okay, but first, before we get to this still holding market, we like to talk about the technical picture. Yes, it's bullish. We had a little bit of a pullback. It alleviated some of the overbought conditions. We can go much higher. Okay, we mentioned before that we have a lot of indicators that could get oversold as we're at highs, like the breadth indicator looked like it was being oversold, which is a buy signal at highs. So this market is very, very strong. Okay, so of course the technicals are bullish. We're breaking out the highs. We barely made a pullback. Okay, let's check the moving averages. We haven't checked them in a while to see if they're coming back. Well, we recovered the short term. So now the price is above all the moving averages, and every moving average is above its next successive moving average. The 10 is above the 20, the 20 is above the 50, and the 50 is above the 200. So, guys, bullish, technically speaking, is obvious. Okay. Of course, we pair it with the sentiment. We are still at a 61. We were 61 yesterday, and we're 61 today. Greed, which is crazy because we're up 1% and it didn't even move. Okay, because we still have the extreme greed in the market momentum because it's still very technically bullish, as we mentioned. But look, now we have the stock price breadth is at extreme fear, strength is at fear. We still have some, the put call ratio is still there, still at greed, okay? But we have some very, very divergent signals here. We have very little breadth as this market is going up, okay? So I still like the sentiment. It's still not there. We still have a lot of bears out there is what I'm trying to say at the highs. And we saw that before with the AAII investor sentiment survey, which will come out tomorrow. Okay, so this is why this market is still holding. There's a lot of bears out there. Okay, and today the still holding market is basically, let's get to it. It's basically two things. We had NVDA earnings after market. We're going to get to that soon. And we had Trump. Okay, U.S. crude falls below $100 a barrel, the key mark, up over 100, below 100, over 100, under 100, over 100, under 100. After Trump says Iran talks in the final stages, okay? So what does oil say? Well, yesterday we were setting up between, it's basically oil and interest rates. Basically, oil tells you what inflation is going to be doing in the market, which inflation is feeding into the long bond interest rates, okay? So yeah, up above 100, here we marked 100, horizontal bar here, the blue one is the 100, up, down, hovering below, around the $100 level, okay? And we mentioned that the market, yes, it will react when Trump says something, but something concrete has to happen because look here, Trump said something before and it tanked oil from 115 down to like 80, but then it got bought back up when nothing materialized. So now, if we are in the final stages, we better have a final nail in the coffin of this of these talks, of this war, because it's just going to continue to stay around here, okay? And, just when we're getting into the Rubicon, yesterday we saw that the 10-year was getting into a red zone, boom, it backed down, okay? We saw that it was going, we saw overbought. Last time it always does this, it comes down, it comes down a bit. Doesn't mean it can't go up higher. Trump has to come through, okay? Because remember, the tick-tock, the clock is ticking, okay? So yes, a little bit of relief here. Hopefully, if it's real, it'll drop the 10-year all the way back down. Everything gets unwound. Inflation's not a problem anymore. And we can get back to the real economy, okay? So again, we're going to reiterate, oil is going to stay up here until there's a concrete, no more Trump messages. It has to be like a real taco Trump. He has to make a deal, a final deal, and this will come down, okay? So, the other big thing today that everybody was waiting for in this still holding market is NVIDIA, okay? After market, it had earnings, okay? You guys can't really see it here. NVIDIA closed at 223.47, and now it's about flat, okay? But if you look at the news here, NVIDIA here, let's see more events. NVIDIA raises dividend. It's each plus or minus 2%. It increased guidance. Adjusted EPS of 187. Okay, right here. Adjusted EPS of 187. And it was expecting, we see the earnings here, 175. So it beat its estimate, okay? However, it had a big run beforehand, okay? So whoever played the earnings here, if you were short volatility, you're going to make a killing, okay? Depends where it opens tomorrow, but usually if it's flat, okay, the premium is going to get crushed coming forward, okay? Going forward. So I think that a lot of this move was baked in beforehand, and maybe we'll take a trade tomorrow on it after we see where it opens. Because remember, this is just after hours. We've seen after hours do nothing or whatever, and tomorrow, the next day, something weird happens, okay? So the good thing is that the market is still holding because of, NVIDIA is still holding. The semiconductors are still high, okay? The semiconductor index, SMH, is basically a carbon copy of SPY, okay? That's why it's still holding. I don't know if it stays there, okay? But it's very, very positive. I think this market, after this war is over, we're going to get another move higher, get people really into this extreme greed territory before a move down, I suspect. Okay, that is, and of course, what I wanted to mention with the still holding market, which was, we mentioned it with the US 10-year that had backed off. Well, the Fedwatch tool, remember yesterday, this 375 to 400 level was above the 350. This is a rate hike. This column here is stand pat, no hike. And for the first time ever, crossed the Rubicon. It was higher. Rate hike odds were higher for the year. This was, by the way, December 9th for the whole year of 2026 we're looking at. Yesterday, this was at above 40-something. Now it's below. Now we're back to no hike because of the Taco Trump. Trump says we're getting close to a deal. Okay, this is going to go to zero if the deal happens. Okay, so that's why you're like, we're entering a red zone when it comes to the interest rates and inflation and oil. And that's why I think a deal has to be made, because Trump is on the clock. So we have this still holding, we have NVIDIA. And the last thing I want to mention today, guys, okay, because it's basically a carbon copy of yesterday, which is we're at a point where Trump has to make a decision. That's it. It's very, very simple. Okay, it's very, very simple. And the decision, I think, will be made in the favor of peace. Okay, hopefully for everyone. Okay, so with NVIDIA, it doesn't really damage the market going forward, because it wasn't. The big problem would be if NVIDIA would do something good and it would tank. Okay, that means everybody would be getting up, and so far it's not. So this bodes well for the bullishness of this market. Okay, another sector that I'd like to look at, guys, that we had a trade on is the Bitcoin miners. Okay, we had Bitcoin breaking above. Remember, we said as it was below here, we're going long. I suspect Bitcoin goes around the 90K level. It broke above this key 73,000 point, this blue horizontal line, and I think it could continue to go higher and hit the 90K. And for that, I decided to play it via going long Mara. Okay, but it's morphed. That trade has morphed into Mara is not anymore a Bitcoin trade. It's more of a AI infrastructure play. It's gonna, feed that market now going forward. And I see a lot of strength in Mara. It's being bought. Okay, I see this most recent price action is different than the past. The past here, all this chop up, down, and tanking is all because of Bitcoin. Okay, and Bitcoin mining, and it's become a very bad business. Okay, it's not a business you want to be in. Okay, too high cost, too low profit. Okay, but this area right here, starting let's say in March of this year, has been repurposed. Mara is being repurposed as an AI infrastructure play. That's why it looks like a series of higher highs and higher lows. The recent trend is up, and I think it continues to go up. Okay, and we still have our options, our 10-15 call spread. We're still in it. Okay, it expires next month. So we're still in it. We're making money on it so far, but I expect it to go higher as the market goes higher going forward. Okay, and another play that I like as a Bitcoin, not a Bitcoin miner, but an AI play is CleanSpark. Very similar. CleanSpark breaks above this 13 level, and I think it revisits the 23, 24 level in the next couple of months. And if it does break that, it's a key level. If it does break it, it can go as high as 40 and 50. Okay, so it's almost the same pattern, only stronger. Okay, much, much stronger. We said this is a better player than Mara because it tends to go, well, look, it went from $8 to 15, almost a double. Mara didn't double. Okay, did it come close? Let's see. Yeah, it's close. Mara's 8 to 13, so it's very close. They're very, very close. Okay, although they both have liquidity. Okay, so you can play either one. So those are the two choices that I pick in this new AI infrastructure play. Mara, I like it more because it already made a deal. Okay, it already had some good news going forward. So let's, I like the sector. I'm still long. I'm not taking a new long. I'm going to wait. But so far I'm going to ride the long that I have. And I also have some shares from a previous structure. Okay, I'm like half shares, half stock, okay, on Mara. So that is the sector that I like asterisk. That is one of the sectors that I'm long and I still like. And this market's still holding, okay? I like it. Very, very bullish. Okay, we have, yes, the sentiment is still at greed. We never went to extreme greed. And this extreme fear in the breadth could be a turnaround signal. We're getting very, very close to the oscillators going into very, very extreme. Well, it is. We're close. We're there. Extreme fear. Usually there's a bounce back. And when that happens, stocks go up. When you have breadth expanding, stocks go up. Okay. And we talked about the SMH and Intel. We have a trade in Intel. But the SMH might be getting tired. This is what I'm looking going forward is market going up, but the SMH not going up as much. And could still go up. But I'm just saying that not up as much, and other sectors start picking up the slack, like the breadth. Okay, the breadth here will get into greed and extreme fear as well. So we really get a real bull market where everybody's on board. Because here nobody's on board this bull market. There's still a lot of bears hanging around. Nobody, a few people. Then they'll say the bad breadth, bad everything. They'll give all the excuses. When we're really at highs, you won't have those excuses. They'll be brushed off. Okay, whereas right now they're still there. We need to have extreme greed and everybody piling onto this market so that I start getting worried as a bull. So right now I'm not worried as a bull at all. Okay, and we mentioned yesterday that you should, because of the red line, you should be net bullish but still have some short exposure. Okay, a little bit of short exposure is okay, especially if you do it in an intelligent way where I do it with options where I get to pick up premium. Even if the market goes up, I will still make a net credit. Okay, so it's like short exposure, but I'm not just outright buying puts and spending premium. Okay, I'm really collecting premium as the market goes up while still being short. Okay, so that's it, guys. Crazy Wednesday the 20th. Okay, middle of the week. I think if there's a deal that's going to be done, it's going to be done before June starts, or maybe while June starts. It's going to be very, very close because, like we said, you're at a Rubicon. Okay, this was, interest rate hikes were on the table yesterday. Now they're off. Okay, you can't have that again, Mr. Trump, because then you're really, really close. We don't have the U.S. doesn't have the room anymore to play around. Okay, it doesn't have a 30% debt to GDP anymore, like in the 80s, where you can just tack on, just keep spending like crazy, and your balance sheet is fine. We're at an extended balance sheet. You have to really, really start thinking about getting out of this war, or there's going to be some problems going forward. The market is saying you're going to get out of this war. Let's see if you prove it right. All right, later, guys.